Hello, I'm Marcus Brix with the CattleFax Closing Bell. Today's Closing Bell is sponsored by CattleFax, the deciding factor. 2022 traded in a wide range for energy commodities. The Russian invasion of Ukraine and the effects of resulting sanctions exacerbated tight supplies of petroleum coming out of the COVID supply slowdowns. By June, fears of inflation and general recessionary demand were setting in, sending record-high crude prices into a half-year downtrend. From high to low, spot WTI crude oil traded from $72.46 to $130.50 per barrel, but year-end prices managed to slip below the year's opening price. Beginning 2023, currently all varieties of petroleum futures are trading above year ago. When measuring the 12-month futures strip, RBOB gasoline prices are averaging 10 cents above year ago and holding 62 cents above the 5-year average for January. The heating oil futures strip is averaging 40 cents above year ago and 91 cents above the 5-year average. Heating oil holding wider premiums year over year reflects the continued price premiums diesel fuel commands over gasoline in the physical market. Forward-month contracts of refined fuels suggest diesel holds at least a 25% premium over gas through spring, but the premium narrows into summer. Crude oil futures are trading more narrowly versus year-ago prices similar to RBOB, currently trading less than $2 per barrel above year ago. Petroleum prices are expected to trend higher this spring, but not widen dramatically over last year's prices, helping keep inflation in check. Surprisingly, one major component of U.S. energy use has fallen below year-ago values: natural gas. European markets did a good job filling inventories late year, and a historically warm winter has eased usage lower, allowing EU natural gas prices to plummet. With roughly 15% of U.S. natural gas production being liquefied and sent as export, the price drop in Europe has helped suppress Henry Hub prices. January average prices of Dutch TTF natural gas are 20% below 2022, but remain 113% above the 5-year average. By comparison, U.S. natural gas prices are 14% January 2022 price levels. Petroleum and natural gas prices are strongly correlated, so it's possible lower relative priced natural gas has been keeping a lid on crude. Spot WTI futures broke out of its June to December downtrend last week and is slated for the highest close in 9 weeks. Crude oil should move sideways to higher once it clears resistance around the $82 per barrel level. Corn futures were mixed this week, with corn trading up a couple cents in the nearby and down a couple cents in later contracts. Soybeans were broadly lower. Live cattle futures were lower this week, with Feb and April each losing more than $1 per hundredweight week over week. In the cash, light to moderate trade in the north took place between $155 and $156 live and $248 dressed. $1 to $2 softer in the live and $4 softer in the dressed trade versus last week. Light to moderate volumes traded in the south at $155 per hundredweight, mostly $1 lower than last week. Thanks for watching. Remember to visit CattleFax.com to become a member and receive the latest market news and analysis.